Okay, at 9 a.m. tomorrow, America time, or this evening for us, Fed Chair Jerome Powell is going to be addressing a host of stakeholders at the Jackson Hole conference. Now, this year, due to COVID and the pandemic, it's going to be a virtual conference, but nonetheless, investors will be glued to their screens for commentary on how the Fed is going to really manage the economic climate in the times that go forward, and in times that now seem to be characterized by low global growth, low interest rates, and low inflation. We know from the last meeting in July that the prospects were quite grim when Jerome Powell spoke about the economic downturn and also how the reimposition of lockdown in various US states due to a second wave of coronavirus further hampered economic prospects. With that being said, the stimulus regime is still on full swing. The Fed maintains its accommodative stance and is willing to support the economy and be its crutch as and where required. One will look out for commentary now more specifically on recovery in the US economy and how it has tapered a bit in recent times. Now, we know that there are certain sectors also within the economy that are doing really well. The indexes are hitting all-time highs, whether it be the S&P or the Nasdaq. Tech stocks are surging. Apple crossed a $2 trillion market cap. All the FANG companies, Facebook, Apple, Amazon, Alphabet, Google, Netflix, they're all reporting stellar earnings, and in fact just last night they were all up, some of them as high as 10-11%. So while there is a fair degree of robustness in these digital companies which now seem to be taking a firm grip of the overall market capitalization, there also lays a fair amount of risk, because right now the disconnect between economy and the real economy rather and valuations is vast, and that's also reflected by the rally we've seen in metals in the last 6 months or so. So Fed commentary on how exactly things are panning out. We've had some other smaller indicators like retail sales, which came out fairly positive for the US recently. There's a whole host of other macro and micro economic indicators that we're constantly tracking, but overall, there's still a way to go till we're out of the woods, until growth is really back on track. I'd say here domestically in India, we're still now, I'd say 60 to 80% at pre-COVID levels for most industries, while some, of course, have already caught up. So, Fed commentary on inflation, where the interest rates are going to lie, although we know they're going to stay low. Just some commentary on that front will be definitely anticipated as well. And how that's all going to be digested by investors might really determine how the next leg of the market pans out.